23, welcome back, everybody. Frank Napolitano's here. Frank Napolitano's here from MortgageBrokersOttawa.com. How are you?
Good, thanks.
I got your whole name out that time.
There you go.
Yeah. It's a blue shirt day, apparently.
It is, apparently.
Yeah, we didn't know, but
No, didn't know.
Jesse's wearing one, too.
There you go. Look at that.
There's blue everywhere. Anyway, lots to talk
Mourning
about.
the Leafs. We're mourning the Leafs. It's black and blue, right?
You're not mourning the Leafs at all.
No, not at all.
I don't know why you're saying that.
Not at all.
And you had to bring it up.
It's a tradition like no other.
The Masters and the Leafs out of the playoffs. Anyway, listen, the budget came out last week. Any impact on home buyers, home sellers, the mortgage market?
Doesn't appear to be right now. Certainly the budget came out and there were a lot of worried individuals with unemployment and potentially all the layoffs that was going to happen. But
Sure.
Initial reaction is that everything seems to be on par, which is nice because this market, especially Ottawa, relies heavily on the real estate market being healthy.
Exactly. And I guess the lesser evil is that only a certain amount of people, a lot less than we expected, will lose their jobs in this particular area.
Right. And spread out over
is
3 years.
That's no comfort to the people who are, in fact, losing their jobs, and we're sorry to hear about that. But anyway, it could have been worse.
Correct. It could have been a lot worse, and some people expected it to be worse. That being said, they didn't make any mortgage rule changes. That doesn't mean that, because typically that wouldn't be part of the budget anyway, doesn't mean that that may not be forthcoming still. Depending on how that debt to income. Well, you know, some of the things that are being bandied about right now would be lowering the amortization to 25 years, which it had been for many years. Potentially increasing the down payment maybe from 5 to 7 to 10. We hope that that doesn't happen because raising 5% for a young couple is difficult enough. Increasing that to 7 or 10 would be even more difficult. Using a different rate to qualify for mortgages so that right now, if you took a 5-year mortgage, which are at 3.29 right now, you can qualify at the 3.29, but what they're talking about, some of the potential changes we might see, is that the posted rate is 5.24%, so you'd have to qualify at the 5.24, which would, again, make it more difficult to qualify. So
there's also lots of talk about a 10-year mortgage option that people are offering.
By far, it is the rage right now for us. It is the most popular mortgage. 6-7 months ago, a 5-year term was at 3.89. So now you're able to get a 10-year mortgage at 3.89, and that mortgage comes with all the bells and whistles, double up payments, 15% per year pay down, increase your payments by 15%, portable, assumable, transferable. It comes with all the bells and whistles. Very, very popular mortgage. And the best part of it is anytime you take a mortgage that's beyond the 5-year term, once you hit that 5-year term, you're eligible to get out of it with just a 3-month penalty interest. So,
and that's good news.
That's very good news because there's a lot of customers right now that can vouch for the fact that they're sitting in a 4.5%, 5.5% mortgage, and they call their bank to try and get out to get the better rates, and it's the costs are pretty high. The penalty's pretty high.
Now, this 10-year mortgage is not, at this rate, is not being offered by the major banks, right?
Some of the major, or most of the major banks that I've talked to are not even close. I mean, most of them are at 4.69, 4.79, and yet we've got 3 lenders out there, and they're major lenders. They're not your corner store bank, but they're major lenders that are offering it at 3.89 and 3.99 right now.
Wow.
So,
for a lot of people, they look at
incredible.
that and go, why wouldn't I do that?
Even first-time home buyers, you look at a first-time home buyer, a couple that comes in and says, maybe this isn't the only home, but because the mortgage is portable, this is our home for the next 3 to 5 years, but we don't have to worry about what the interest rate's going to be for 10 years because we'll be able to take this mortgage, move it to the new house that we buy, and, you know, if the interest rates have gone up, like many expect, I truly expect that 2 years from now, interest rates will be anywhere between 1 to 2% more than what they are right now.
Right.
So.
Well, they can't
so
go
this
much lower.
eliminates. No, hard to believe that they would come down any.
Who's going to win the Masters?
Boy, Tigers on a.
I know,
we'll
man.
see. We'll see. It looks like he's the favorite. I wouldn't be surprised.
He is the favorite.
Yeah,
I was watching a report yesterday. He is the favorite.
I wouldn't be surprised.
Yeah.
Anyway, he's brought everybody back to golf, so which is really good.
Do the Sens get past the first round of the playoffs?
Boston's going to be a tough game, I think, but they're going to be beat up if they do get by him. I think
enough.
so.
True enough.
So, but who knows, right? It's hockey.
We'll see you in a couple weeks then.
Be back. Looking forward to it.
All right. Good to see you. Frank Napolitano here from MortgageBrokersOttawa.com. If you've got questions about those mortgage rates and so on, you know who to call. We'll be right back.